By way of introduction, we're going to be recording this session and it'll be uploaded later onto YouTube. We have a Asian Investors Network channel and we plan to record and release each of these videos on that channel. So look for a post later on in the Facebook group for that recording. So what we'd like to do now is do a quick introduction of everyone on the call. So it's a 30-second introduction. First is your name, where you're from, what you do, your experience in stocks, and describe in one word what you think about the stock market this year. Why don't we go down the list and start with Ken?
Awesome. Hey guys, I'm Ken. I'm from New York City. You might have seen my name around. I'm one of the moderators on AIN's Facebook group. So thank you all for participating and also being such resources and engaging people. So my background is in startups, particularly fintech. I'm also I also work in early stage investing through a fund called Art Fund. I also am a economics and financial markets nerd. So I think the ask was what my prediction is. Very complicated topic, but I would say in a short, just real quickly, since we're doing intros, I think we're going to hit a bit of a wall in 3 months when we see the market, the unemployment benefits and all that stimulus kind of tail off, and then we're going to have to reassess the market. Who's next?
All right, great. Next up, we got Kenny. Thank you for that, Kenny.
Oh, okay. Hi, I'm Kenny, and I live in Atlanta, Georgia. Let's see. I've been investing for probably about 9 or 10 years. I like to invest in stocks and in bonds. As far as what I do is I do like data entry for a medical records company. As far as my prediction for the market, I think we'll probably see some more negativity, I guess, like Ken has said, like because of all the fiscal stimulus wearing off, and we'll probably see more drops and whatnot.
Awesome. Thank you, Kenny. All right, next up, we got Sam, I believe from Australia. Is that right?
Yeah, I'm actually from Australia. Sorry, can you repeat what the question was? Because I was just switching the audio to my headset, so I kind of missed it.
Sure, no problem. I also wrote it in the group chat. It's a 30-second introduction of your name, where you're from, what you do, your experience in stocks, and describe in one word what you think about the stock market this year.
Oh, okay. So I'm from Australia. I used to trade stocks. I actually don't trade stocks anymore. So I specifically day trade now. I put all my investments actually in real estate or commercial real estate, only because I do know that I don't actually invest in stocks for the long term, because I don't actually look at it from a long-term perspective. I mainly do day trading as opposed to investing long-term in the stock market anyway. So all the profits that I make from day trading, I actually put that into real estate. So in terms of what I think would happen in the stock market, from a seasonal perspective, I think that just from looking what's actually happening to S&P 500 last night and from the ASX 200, it looks like it's going to go down over the next 1 or 2 months. From there, I actually don't know, because I actually haven't actually done any analysis on that. I don't try to predict what's actually going to happen in the market, actually. Yeah. For the long term, that is. Yeah.
Cool. Awesome. Thank you for sharing that strategy. Next, we have a volunteer, Will from the Bay Area.
Yes. Hey, guys. How you guys doing? Can you guys hear me?
Yeah.
Yep.
Okay, perfect. Just to make sure. Hey, my name is Will, and I'm actually from currently living in Union City, California, and I'm actually a home mortgage consultant for Wells Fargo. So I do home loans for people who are from 1 to 4 units. residential dwellings. And my experience in the stock market, in 2010, I lost half of my college tuition in the stock market. I had to end up really plan on my
Oh,
daily
no.
meals to be about $2 per meal every day to survive. But anyways, describe one, but eventually I made it back at the end of the day. So fortunately, and I mainly invest in real estates, residential real estates, primarily. And looking forward to getting into commercials, but still need more research. At the same time, still looking forward to diversify my investment a little bit and invest some money into into the stock market. As far as one word describing the stock market this year is absolutely a roller coaster, but still, I think my personal stock investment philosophy was that just dollar costing average, that you invest during the highs, during the lows. Ultimately, those are, fun money that I just set aside, and, on a regular basis. And I believe that in the long term, by doing so, it's going to be a profit at the end of the day.
Awesome. Thank you.
Great. Thank you, Will. Next, we have Ryan from 3 locations, Kuala Lumpur, Singapore, and the Bay Area.
Hey guys, so I'm originally from Malaysia and I live in Singapore for over a decade. Now I'm based in the Bay Area, and I don't have a lot of experience with stock trading. My main job is I'm doing marketing automation for a cybersecurity firm. So I think that the stock market is it's going to be very interesting. I just don't know how it's going to unfold. I'm here to learn more. Yep.
Awesome.
Guys, thank you. If you don't mind keeping it to like maybe 20 seconds, want to make sure we have a lot of time for discussion. So go ahead, Ken.
All right. Next, we got Kelvin from Singapore.
Hey guys, it's Calvin here. Started investing when I was kind of young. That was in 19 years old. So this year I'm kind of like 28, so it's almost a decade right now. Today I'm a full-time investor that's based in Singapore, but most of my investments are really in US equities. So I run a fairly concentrated portfolio, and in Singapore I run a company that teaches people how to identify growth companies as well. And I enjoy meeting management and conducting management calls. So at times I do have to wake up quite early, but I enjoy that process. So I'm happy to be here and also hope to get to know more of you guys.
Awesome. Thank you, Kevin. All right. Next, we have Sam. Wait, I'm sorry. Alvin from Kuching.
Nice.
Hi again. Good morning from Asia. I predominantly invest on behalf of the family for REITs, real estate investment trusts, in Singapore and Australia, but also in Malaysia and Hong Kong to a lesser extent. Asia Pacific, really. Moving forwards in the coming months, I'm excited about 5G, I guess. 5G is starting in Malaysia and Singapore. So that might be a big area in terms of data center REITs and maybe fintech as well, as Kenneth says. So yeah, that's me.
Awesome, great. Thank you for that. Now we have Chinmay.
Hey guys, I'm Chinmay and I'm dialing in from Jersey City, New Jersey. I am a software developer. I've been working in New York City for 12 years now. And I've been trading stocks for myself, my own investments for the last 10 years. Basically trying to find like good long-term stocks and rebalancing to optimize for taxes and like maximizing gains. In one word, I would describe this market as very interesting because even with like everything that's been happening, I've been doing pretty well. Yeah, and I hope that I'm saying the same thing at the end of the year, but I feel like it'll go up it'll be up at the end of the year. I don't know. I can't say about in between that.
All right. Got a prediction going. All right. We have Jennifer Pan. Jennifer, are you able to see us or hear this?
I think Jennifer just joined, so maybe we move on to the next person, and then Jennifer can prepare us.
Thanks. Okay, we got Eric from San Francisco next.
Hi. Hi, everyone can hear me?
Yes.
Yep.
Okay. Awesome. Yeah, so I do software by trade. I think long-term investing, I've been in the game for about 7-ish years. I think within the last 2 years, I've been poking at swing trading and derivatives. And so I think one word about the stock market this year, holistically, volatile, which makes things very exciting and scary. I'm not going to make a prediction, but just based on that information, I think can, I think it'll just be very interesting moving forward.
All right. That is fair. All right. How about Wen from Philly? Sunny Philadelphia.
Can you guys hear me?
Yep.
Hi, I'm Wen from Philly. I work in New Jersey, say IT tech. Let's see, what do you do? I've been trading the stock on and off, and also I do a day trade. I think this year the stock market is crazy because even with all the negative report, the stock go up after it went down a lot. So, which is crazy. So that's it.
All right, sounds good. All right, we got Sam Rambo.
Oh, okay. Am I introducing myself again, or is it a new topic, or?
Sorry. I think you went in the very beginning. My bad.
Yeah.
Okay. It's Justin live from the Bay Area. Yeah. Sorry, Sam. Your name popped up to the top again. So.
Oh, good.
Oh, good. You guys hear me?
Yep.
First of all, Sam, I love your last name. I thought you'd be a lot more muscular, honestly.
Oh, yeah, it's underneath this.
Yeah, well, nice to meet you, my Asian brothers and sisters. I'm Justin. I'm from the Bay Area. I'm in technology sales. Been investing since February. If you guys remember SPCE, Virgin Galactic, I made some money there. More like I lost 7,000 and I got like 10,000 back the next day. Lost my nerve, and I don't want to gamble anymore. So I'm trying to learn how to invest for reals. Looking forward to meet you guys. I think the stock market is still going to go up, even though we had a crushing loss today or drop in the market.
Did you start on Wall Street bets?
Oh man, I wish I never discovered Wall Street bets, but it's been a wild ride.
Asian WSB.
Man, I think that's why stocks are going up. By the way, I look forward to talking more.
All right, we'll cover that in depth later. All right, now we have Lynn from Australia.
Hi, hello everyone. Can you guys hear me well? So I'm from Melbourne, Australia. So it's good morning to everyone over here. I'm just new to investing, so just here to learn from everyone, I guess. And then background about me, I would say I'm a graduate of architecture, so very left field from everyone's at the moment.
Awesome, thank you, Lynn. All right, next up, Michelle Brackett.
Oh, hey everyone, let me pull up the intro details. Okay, so yes, hi, my name is Michelle. I'm from the Bay Area. Kind of lived all over the bay, but generally always live by the ocean. What I do, I work in a role that's between kind of like marketing and sales for a tech company in San Francisco. I've been with the company about a year, helped generate about 1.9 million in potential pipelines. So that's a lot of fun. Experience in stock, kind of new, and here to learn more. So one word to describe the stock market this year. I think it would be either optimistic or pessimistic, depending on your perspective or your view. I think that this year was kind of a hiccup, but I think it will kind of lull on and then have more of a proper economic drop in a year or two. But I think it'll go on a bit more steady. That's my opinion. So again, either optimistic or pessimistic, depending on your view as of things of late. Thank you.
All right. Thank you, Michelle. Next up, we have Mitchell.
Hey everyone, I'm Mitchell. I went to high school with Sam in Fremont. I just started investing at the end of April, so it's only been like 45 days or so. Don't really know what I'm doing, but I saw a lot of gains in those 45 days, and then today it just went down. So I'm trying to understand what that's about. My one word for the stock market is I don't know. I'm new to this, and so I'm here to see what I could see by being active in this group. So
Came to the right place, Mitchell.
Yeah.
Awesome. Thank you. Glad to have you. All right. Next, we have Sheena.
Hi, everyone. Can you hear me?
Yeah.
Yeah. Okay, cool. So my name is Sheena, and I'm from San Francisco, born and raised. What I do is I'm an instructional designer for an electronic health record for the San Francisco Department of Public Health. In terms of stock experience, I have zero. What I do want to know is how to get started. I've saved up enough so I can play with some money. And it sounds bad that I can play with money, but I have some room now. So as a new person to stocks, it's really confusing, which is my one word.
All right. Again, came to the right place. Cool. Next, we have Spencer, also from the Bay.
Yes, I don't have the thing in front of me, but I presume it's just intros. I don't see the thing that I should introduce, but I do real estate full time. I used to work in technology sales as a manager for the last decade. Experience related investing. I've tried picking stocks many years ago and realized I couldn't beat the general market. So I just invest in the index funds. And then I do still do some random trades here and there for specifics, but most of it will be in index funds. I think other people have mentioned about what I think of the market in one word. I would say fun.
Awesome. Love it.
Is that F-U-N, fun?
Yes, F-U-N.
Yes.
Okay.
I wish I could feel that way.
Yes. All right. Now we got Vincent
Hey
from the
everyone,
Bay.
I'm from the Bay Area. My background is in law and computer science. I focused on startup and VC and securities laws. And in terms of investing, if we count me as a kid making decisions for my parents, then I've been investing since the 90s. Otherwise, I've been in this for about 11 years. I invest mainly in equities, derivatives, and crypto. And one word for the market is inefficient with regards to price discovery.
Love it. Nice and succinct. Okay. Now we have Yang.
Hey guys, Yang. I work at Intel in pricing. In terms of my experience, I've been DCAing and reserve a bit of call it FU money to invest on things that are sort of a gamble. But for the most part, just DCA. I also don't believe that I can beat the market, and so I usually just bet on the market.
All right. And did I miss anyone? I think some people joined at the end, and also the this is continually updating, so I apologize if I missed anyone. Okay, looks like we got everyone.
I think we missed one person. I think Jennifer Pan, did you join? Can you hear us? Anybody there?
Maybe not.
Okay, maybe not. Cool. Sam, do you want to begin?
All right. So, thank you for sharing everyone's intro, everybody. And now let's get to our first discussion topic.
Yeah, Sam,
So,
before we begin, let me just
yes.
reiterate some rules. So we'll do a roundtable, first of all. If you could obviously respect each other's conversation points. And then at the end, if you would like for us to share your contact, would love this to be an opportunity for us not just to discuss important topics around investment, but to continue to network with each other and find opportunities together. So that's kind of the mission of the Asian Investor Network. So, sorry, go ahead.
All good. Thank you for that, Ken. All right, so let's get started. And the first topic is, oh, I'm sorry. I didn't make my own intro, so I'll just do that real quick. My name is Sam Fong, created Asian Investors Network for all of you to basically share knowledge, gain contacts, and basically become more successful as investors together. What I do is I work in private equity and commercial real estate investing, basically enable very high net worth individuals and family offices to invest in commercial real estate. My experience in stocks is I've been investing for about 15 years. I started at a very early age. I made the bulk of my capital during the last recession. 2009, I went all in, and I plan to do the same this year. So I think it's a great opportunity. Describe in one word what I think about the stock market this year. I think it is opportunity. I'm looking forward to it. I already started investing heavily in March. I'm hoping that this current drop leads to more so that I can buy more. That's my plan for the year. All right, so for the first discussion topic, what is a successful strategy you have executed in the current market? We'd like to hear from anyone who believes they know what they're doing and has a track record that they think is good. So let's start with anyone who would like to volunteer.
All right, I'll volunteer first. So it's Calvin from Singapore. Been investing for quite a number of years right now. I think one of the biggest mistake, I think for a lot of investors, including myself, is that we pay too much focus on to the market, right? Because if you guys look back at this fund manager, Peter Lynch, who wrote several books, one of his famous was One Out on Wall Street. It says that, you know, he only spends less than 15 minutes on economic analysis. And, you know, the way I look at it, I do feel that the economy is such a complex, adaptive machine that, you know, we try to analyze it every single day and it changes every single time. And this is something that obviously we can't really control. But whereas we spend our time more productively understanding companies' fundamentals, you know, I think that would be a lot more important. So a lot of times I think people would ask, hey, you know, what's your view on the market? I typically would say, no, I don't have, I have no view, right? The market can either go up or go down. But if you ask me about the companies I'm investing in, all that I'm concerned about is the next quarter, will the sales go up, will the profits go up, is the valuation still sound correct? Because those are the things that I feel you have more control, and I think it's not so erratic as compared to the market. So it's hard not to be distracted by the market, but having that focus have actually allowed me to compound my money around 30% for the last 5 years or so. So I think that's something that have been working out for me.
Awesome. Thank you, Kevin. That was a great description of your strategy. Kenny, I believe you raised your hand to go next.
Oh yeah. Yeah. Hi again, guys. Yeah, one successful strategy that I've been using, for like the past, ever since, since 2020, is I've been trying to first off, I've been trying to find companies that I like that have a good balance sheet, like they don't have a lot of debt, like they have like a good current ratio where they can pay their bill, they have more than enough money to cover their bills like within a year. So I find those companies. And then number two is I've been trying to sell a put contract, which is basically like, for example, like someone is like, hey, Kenny, will you buy my stock at $5 or at $10? And I'll be like, sure, just pay me, $1 or $2 and I'll agree to buy it. And it's kind of, because the market has been going up, like it's kind of a good way for me to earn some side income while I'm waiting for like corrections like what happened today. So like by finding a good company that I like, and also like selling the put contracts, in my mind, I think that's kind of a good combination, like because I can benefit by getting that little bit of income, while the market's going up. And then like if the market goes down, I can live with the price going down, because that'll probably be meaning that I'll be buying more of that company.
Awesome, Ken. And these are covered puts. They're not naked, right?
Oh yes, yes. So like I use Ally Bank for my account, and they I guess they set aside the money like for however much it is for to cover the put obligation.
Awesome. And do you mind explaining for the newer investors what exactly a put contract is and why it's not as risky as, say, a naked put?
Oh yeah, yeah. So like basically with a put, it's basically you're agreeing to buy a stock at some kind of price, and in exchange, the other person, they're going to pay you a premium or a commission or a fee for you to buy their stock at that agreed price. Like one example I did recently was I sold a put option contract for Hanes brands. You know, the underwear and the innerwear. So like I agreed to buy the stock at $9. And like what happens is like the condition will, for me to buy that stock at $9, basically the price has to be less than $9 when this put option contract expires. So like the put option contract I have now, like it'll expire next Friday, not tomorrow, but next Friday. So like if the price is like anything below $9, like the market price is below $9, then I will have to pay $9 to buy that stock from the person, the other person. Does that any questions? I know it's kind of a little herky-jerky explanation.
Hey, so basically, it's like insurance, right? You're
yeah, that's a good way to think of it.
Selling the fact that if Heinz drops below $9, you will buy it for that much, for $9. But if it doesn't go below that $9, then you just sold someone insurance and they never used their insurance policy. Kind of like how you.
That's perfect. Perfect. Yep. Yeah, exactly.
That's a good explanation. Awesome. Ken, you would like to add something?
Yeah. Well, first of all, options are by no means something that you want to play with if you're a beginner. So let's just make a note on that. They're highly volatile. I've seen people lose their shirt with it. and they're very sometimes hard to understand in a sense because there's various ways to, you know, play with options, either sell them or buy them, that result. And sometimes you can also buy them in, like, there's ways to leverage as well. So I would say do your homework before you begin playing with that if you are just starting with your investment journey. I think the best way to think about it is, yes, it is a hedge, it is a risk hedge against volatility in certain kind of equities. And so just to kind of bring it back to sort of our like at least kind of investment philosophies, I'm probably very different from a lot of you guys in the sense that I don't look at, so there's a traditional value investing that you would look at from the perspective of Warren Buffett or Charlie Munger, right? They look at fundamentals, they look at ratios, they look at balance sheets, they look at cash flow over time. Then they discount that value back in time to what they value a company is today. That's traditional value investing. The other way to look at it is there's some traders here, for example. And I'm not saying that any of those are wrong. I'm just saying I just want to set the table for everyone here that may be learning for the first time. Trading involves playing with volatility. What you're doing is you're looking at positions and you're saying, okay, I expect a certain amount of movement in the day, maybe up or down, and either I can short a stock, which means I'm betting that it's going to go down in time or over a certain period of time, or it's going to go up over a certain period of time. Where I differ, and we can discuss this further if it's of interest, is I guess you can kind of say I'm like a technology value investor, in the sense that I'm not looking at valuations or fundamental analysis in isolation. I'm looking at it in combination of views into what are the tectonic shifts in society, in behaviors, in you know, humanity, and who's going to be the monopolistic winner. So I don't care about what, say, I don't know, Hanes underwear is doing tomorrow. I don't think Hanes is going to be changing the world tomorrow. I care about what companies are going to be essentially monopolies in the next 10 years. And all I'm going to do is I'm going to do my homework, qualitative and quantitative. And I'm going to say, okay, I'm going to pick this guy as a winner. I don't care what it does tomorrow. I don't care what it does 2 months from now. I know in 5 years, this thing is going to be 40x, 20x, 30x. My money's going to double or triple at least. Okay, and that's the way I look at things. And there's certain kind of positions I take that are considered risky today, but because I look up and down the investments that these companies are making over time, it actually begins to make sense from the ecosystem standpoint, connecting the dots, sort of the confluence of all these things that are happening at the same time in society and technology. So, I mean, again, my background is technology, so I've been a research analyst at some firms. I've been in consulting. I had startups. I've been involved in investing as well from the startup side. So that's just sort of my lens. So anyway, that was my 2 cents, Sam.
Awesome. Thanks, Ken. I know we had a brief discussion about it yesterday, but it's good hearing the longer form explanation of it. I guess I will go and discuss my strategy next. So I basically honed my strategy off of many of the legendary investors, Warren Buffett and so on. I figured I wouldn't try to reinvent the wheel, and I just studied their strategies comprehensively and adapted it for myself. So I view everything through what's called a fundamental analysis, especially of the value side. So my strategy consists of basically finding great companies that are currently trading at a discount for whatever reason. So I love to do what I believe Kenny called a treasure hunt and look for great companies at a bargain. This was really readily available during the financial crisis and also in March of this year. So I think that it's one of the easiest ways to make a ton of money. For example, my positions are all at least 60 to 100% up since for the entire year overall in the portfolio, because it's so easy. They're like no-brainers, and they're very low risk in terms of the type of companies that you choose. But it really depends on how well you do your research, and fundamental analysis really requires that you look into the financials and the fundamentals around a company. What I mean by that is you want to look at the financial statements that are published quarterly and annually. You want to look at the competitors and how that company is placed within that industry, and whether that company has what's called an economic moat, or something that is like a secret weapon that will allow it to dominate and continue to be a great company in 10 years or something like that. When you have something like that, then you can be assured that even if the company is undervalued today, that it's been punished at a discount, it's going to recover and grow to new heights. So examples of this could be, I bought Intel back in 2006 at $17. At the time, AMD was viewed as like the next hotshot, but I saw that Intel was in pretty much, all of our devices. It's a market leader. It's got great management, and it's going to recover. So it shortly recovered afterwards to $30, and that's an example of what I view to be a low risk investment with a high reward. Another example would be Visa. Visa, I just bought at IPO because it's hard to think of a better company. I mean, that company is just a money machine, and the risk is so low. I mean, the world is moving towards cashless societies, and this could be an example of Ken's tectonic shifts that he was talking about. A massive momentum change towards this type of world and this type of payment. And Visa has very low risk. It has incredible financials, incredible fundamentals. It's a market leader. And if you're able to pick it up at the IPO, I mean, it's gone up tremendously since then. So that's basically my idea or my strategy for fundamental analysis. Anyone want to share their thoughts or strategies?
Yeah, I'll share a few things actually.
Sure, please.
Yeah, I'm actually on the other end of what you guys are doing. So I actually don't look at any of the fundamentals at all. I don't read any news. I don't do anything like that. I specifically only read the charts and what's actually in front of me. And from what I can see from the charts, if I wanted to take a more of a long-term perspective of what I think is going to happen on a particular stock or on a particular index, what I'll do is I'll zoom out and have a look at what's actually happening on, let's say, on the monthly chart or the weekly chart. And then that would actually tell me what's actually going to happen, or have a high probability of what I can see what's going to happen over the next 3, 6, 12 months. I personally haven't done any of that kind of stuff because I don't trade through the long term. As Ken was mentioning before, whether you're trading options, CFDs, or Forex, you're actually trading on margin. So it is a lot higher risk. It's higher risk than actually just buying shares on its own. The reason why I trade on margin is because I feel that I get in and out so often, it's in my best interest to use that as an opportunity to make easier money, because I'm using $1 and the broker is actually putting down 100 or 400 depending on what margin requirements with that broker it is. So the way I trade is I trade the Forex market, and I just look at specific patterns that have been known to work over time through probability and what I see in the charts. I spend all my days actually looking at charts from 3 p.m. all the way up till 6 o'clock in the morning. So throughout the daytime, I look at what's actually happening in the European market and the Japanese market and the Australian market. And then at nighttime, I look at what's happening in the US market. I do want to actually, now that you've mentioned it, Sam, I do want to put some extra cash into aside to put into longer term stocks. I've never had a play in terms of putting into investing in that sense. I've always put all my profits into real estate because I think you know, I'm trading in such high leverage, it's best if I put all my profits into more stable investments, which is residential or commercial real estate. And that's what I've been doing. But I can see how I can show you guys, if you guys want to learn it in the future, how you can actually read charts and actually still trade on a daily basis and looking at how.
Detected at your front door.
Sorry, it's just my, my front door. But you can actually look at the charts without reading any news or anything, having a look at the daily chart, let's say 1 hour a day before the market close, and still trade normal stocks that way as well. Because I used to do that back in 2002, 2003. And then I stopped doing that because of liquidity issues in terms of position sizing and things like that. And I remember when I was trading during that time, when I was trading large positions, every time I was trying to get in and out, it would take me, let's say, sometimes 2 to 3 minutes just to get in and just to get out, and I would be getting requotes all the time. So I stopped doing that and I started trading futures and Forex because of higher liquidity.
Awesome. Thank you for that detailed explanation. Yeah, so it sounds like we have a lot of fields of thought here, and that's really reflective of how investors invest in the stock market. You really pick a strategy that works for you, hone it until you improve and find a winning strategy and just execute it over time. So it sounds like many of us have like different strategies and ways of investing in the market, but it's been working over the years. Does anyone else want to discuss their strategy, or should we hone in on these questions more?
Hey, just real quick, this is Justin. I'll say something because I don't think anyone else mentioned it.
Sure.
Where I've seen success in trading recently was actually in commodities like gold and silver. Because of financial policies, everyone's hearing about how the federal government's printing a lot of money. They're buying a lot of corporate debt right now. So as a result, when that happens, we hit inflation, and when inflation hits us, like commodities like gold and silver go up in value. So that's where I've seen success. So it's not just stocks, but also other commodities as well, and in gold miners as well. Gold and silver miners have been doing really well.
Yeah, Justin, you bring up an interesting point. There's also folks that view cryptocurrencies, Bitcoin in particular, view that as a hedge against inflation. And so there's been a lot of discussion around that as a store of value. I know not a lot of people are on board with that, but I think the statistics and the figures kind of speak for itself. Before we go into diving deeper, Sam, I wanted to actually open the floor for a non-experienced trader to ask a question or ask an area that they want to focus in on before we move forward. Anybody that considers themselves a beginner have any thoughts or questions or just kind of perspectives?
Yeah, Ken, a question for you about looking at these tectonic shifts in the market and in our industry. How often do you go back and kind of relook at some of the bets you've made? And what kind of where do you draw the line in terms of hey, I don't think this is working out, I'm going to pull out?
Yeah, good question. I'm always of the view that you invest with conviction until new data provides a different view, and you have to take action on it. And I actually have a very specific lens in which I view investments. And it took me actually quite a while to, for example, Bitcoin in particular was an interesting kind of case study in that, where I was testing my lens, I was testing my framework of thinking. I was initially a very, very strong skeptic. I thought it was a bunch of just, cowboys trying to make a quick buck. But then as I spent 4 months kind of diving into the technology stack, the origins of it, why it exists and what value it adds in the world in the first place. And then I looked at its behavior as a hedge against the overall markets. Is completely uncorrelated to any other asset class out there. So because of that, if you guys are familiar with portfolio theory, I kind of sit on the fence about that, because portfolio theory looks at investing in assets that have non-correlative kind of behaviors. But I also believe in investing with conviction. So I actually decided Bitcoin was worth it to put into my portfolio. And you can see that it's kind of stood at 9,500, 10,000 for about a few months here. I got in below that. So to answer your question, when I look at tectonic shifts in technology, I'm spending time understanding, like where has where has the technology revolution kind of evolved over time, going as far back as the 1960s and 70s. Then I look at what I mean. There's like 7 questions. If you guys ever read 0 to 1, I actually put a post on AIN about that. There's a 7-question lens in which I always ask myself this. There's a few that I don't agree with, but I always ask myself this: can this company create a breakthrough technology? Is the timing right? Do they have like the people, the team? Let me see. Actually, I got to go back to what I wrote. Do I see this company being around 10 and 20 years? So that's a question that Sam brings up, the moat, right? Does this company have the ability to fend off competition? Is a barrier to entry so high that they've built? Is it worth actually investing in for that perspective? Then lastly, this is the most intangible thing. What is the unique opportunity that this company does and sees that no other company out there sees? And there's only a few companies that actually I view that fit that criteria. Anything else that someone says that's a real cool stock, invest in it, I don't fucking touch it, because it's good for a 1x, 1.5x, 2x return maybe over a year, but then it's not going to give me the return I want. In 10 to 20 years, I want to say I've invested in Amazon at $100 a share, and see the stock go up to today $26.50, I believe. No one would have seen Amazon 10, 15 years ago being what it is today, but because innovation stacks on each other, innovation compounds. So the barriers get even unsurmountable over time. So that's the reason. That's my lens. And when I see that a company is not executing, that's when I say, okay, like that's enough. For example, I exited Microsoft recently. Microsoft has been around for a long time. It's pivoted into cloud. It's one of the largest cloud providers in the world. It has a cash cow business in productivity. What's it called? Operating systems, things like that. And it's simply not. I mean, the moat is strong, but it does not have that like 10 to 20 year insurmountable lead, in my opinion. I see a few other companies that are going to just eat its lunch in other areas. It will always be profitable. It's not a bad company. It's just not what I want in 10 to 20 years. Does that make sense?
Hey Ken.
Yes.
Yeah, I just want to come in and to say that I totally resonated with what you said, and it was precisely that line of thought. I think we interacted quite a bit on the Facebook page group, right? I think what you have said, I totally resonated with that, and that's also one of the biggest reason why my returns has been around 30 to 40% every year. It's really going for those exponential compounders. If you look at companies like CrowdStrike, right, which is a cloud native company that's eating a large of thematic, McAfee, and all these kind of things. It's really the disruption that's happening, and we should really always invest in disruptors, because sometimes the incumbents may look good financially, but once they're being disrupted, the financials will look bad and the share price will just tank really badly. So it really pays to be investing in disruptors. But just would like to find out from you, Ken, how do you actually stay abreast with the developments? Do you rely on your informal networks? Because like the kind of investing that I guess you and I do is quite hard, and sometimes I have to find people on the ground to get that kind of information. So I just want to get your thoughts on that.
Yeah, thanks for that question. I think that's also a fair question for anybody trying to get into investing for the first time, because okay, I guess here's another framework that I apply. It's a little bit lazy sometimes to simply read what's on Motley Fool and other places and I'm not saying anything that's bad. I think it's part of the information that we have to funnel through, right? If someone recommends it, I'm skeptical because I'm always, and again, I'm not saying information sources are good or bad. I'm just saying I always come in with a skeptical eye because my risk appetite is different from other people. My information thirst is also different, right? So what I'm doing is I'm saying, okay, if that person's recommending that stock, there's probably a unique opportunity. There's probably not a unique opportunity that that company has spotted already. So the question would then be, because if it's well known, if someone's recommending it, there's not a unique opportunity. Does that make sense? It's not a secret question, so to speak. And so I'm always looking for that secret question. But what I do then is I say, okay, and this comes through like accumulated knowledge a little bit too, because you need to be constantly learning. And I don't want to pontificate too much because I want to give space for other people to talk. But what I'm saying is, if you understand the fundamentals of macroeconomics, so another reason why I'm into Bitcoin as an example is because I've studied the reserve currency system and the central bank system, and I understand what the gaps are and why Bitcoin exists, what it actually is doing to disrupt that. And if the network, they call it network effects, if the network builds out, the nodes build out, then it has a place in completely changing the way we pay for things, the way we store value, the way currencies, reserve currencies like a US dollar, how that exists against other currencies, the euro, the yen, the renminbi. So I guess what I'm saying is I'm diving deeper. What I want to do is I want to understand, how does the world exist today and how could it be in 10 to 20 years? Then I'm saying, what company is either building that out or like building the infrastructure, right? Or is going to be the monopoly, the unregulated monopoly. So if like, who's like, just an example, who's unregulated monopoly today? Amazon, unregulated monopoly, could be 10 companies right now. Who else? Microsoft, could be 6, 7 different companies. So I'm just trying to give you guys some case studies about like what that actually looks like and what it means. So does that answer your question?
Absolutely.
So just a quick follow-up to that for you, Ken, or for anybody else, I guess. You know, I mean, I think like hindsight is always 20/20, right? And I think a lot of these companies, you know, once they have 10x and 20x, it's like pretty easy to tell the story. But I guess it's just, you know, you often hear that like oft-quoted advice from Warren Buffett. You know, when automobiles were coming around, you know, he didn't bet, you know, he wouldn't have bet on an automobile company. He would have bet against horses, right? So, I mean, it's hard. I think it's hard to pick a winner amongst like, I'll just take like, you know, virtual reality or augmented reality. It's hard to pick a winner out of, you know, kind of the field of all the different companies and how they're kind of differentiating on that technology. But we know that, you know, some things are going to go away. So I guess I'm just curious, like, how do you guys kind of differentiate and, you know, parse that information to be able to pick some winners? And I get that you have some pretty restrictive criteria that you're using, I think, to filter for companies, but some of that data is not readily available. Some of that is very deep in the weeds research. You probably can't, you know, at least a routine investor can't get their hands on. I'm just kind of curious how are you finding these kind of needles in the haystack, if you will?
So what I do is I always am reading the news to see what's going on in the markets and what's going on with certain companies. When I find a company that I think has potential, then I add it to a target list, and then I'll start reading and learning about that company and its industry. I think that investing is really a game of making calculated risks and removing as much of that risk as possible in your favor so that you end up with a great return with a low risk. And I think the best way to do that is with knowledge. And also with knowledge of that company's financials and its fundamentals. At the end of the day, you have to make both a quantitative analysis and a fundamental analysis, at least for this type of strategy that we're discussing. and you kind of have to make a judgment call based on all of the information that you've learned about this company. Is it positioned in such a way that it's going to beat its competitors over time? Does it have a insurmountable lead or a advantage, or like a secret sauce, or some sort of powerful barrier to entry that's going to prevent other competitors from getting into its way and eroding its profits? So I think the talk about the exit strategy is true. Basically, you want to stick to your analysis unless something fundamental shifts. So that really removes a lot of the emotion and the day-to-day price drops. Like, say for example, today, like there's a sea of red. A lot of newer investors, got out and they took losses. But if you knew that your judgment was correct in the first place, there's no reason to shift it, and there's no reason to get out unless something fundamental shifts about that company or your strategy. Say for example, you found out that the CFO was a fraud and he's been defrauding the company. That would be something fundamental you should get out right away, right? But a overall drop in the market, that's a opportunity for you to buy more, not an opportunity to sell. So I think that that's the part about the exit strategy. With regards to researching the investments, I really just look at the finances. I have like several screens that I use. There's like tons of resources for you to really look and screen out companies that meet your criteria. So it really depends on which resources you want to use. But yeah, in general, I would just not pay attention to what people recommend. I would just look at analysis and do my own due diligence.
Okay, no, that's really helpful. And if I can kind of make that a little concrete, so if you look at a company like Tesla, for example, right? The market has arbitrarily, enthusiastically, maybe with momentum investors, has assigned some value to a growth multiple in terms of where they think the trajectory for that company could be. But arguably, some of the comparisons to even like Apple in terms of some of the technology differentiation, consumer-centric model, some of those things arguably are there, right? So you look at a company like Tesla, and how would you think about that? I mean, it's highly levered, it's extremely news driven, right? So I mean, there's a lot of things going wrong that have, I guess, in the past allowed me to think about shorting the stock or buying puts, but it continues to kind of carry away, right? So I guess my point being, like, I think especially when it comes to certain really strong fundamental stocks, I think equities are forgiving over time, right? So if the fundamentals are good, I think over time you'll reap the rewards of that. At some point you will, right? I mean, it's just the market kind of catching up, right? But I think that becomes a little difficult when it comes to derivatives or timed events around certain things that you're trying to do, where you may not have that kind of luxury to ride out. I think the kind of the lag in the market. So I'm just kind of curious, like, to make it a little concrete, like a company like Tesla that arguably has been a disruptor, supposedly has a moat, has differentiated pretty well around its battery technology. I think it has a pretty good kind of, now has a portfolio of different products. Like, how do you guys think about a company like that?
I think that's a really great point.
Is that going to become like a $2,000 share price in the next 2 years, 5 years, whatever?
That's a good point, and I'm sure it's going to draw a lot of great discussion, because I know that we have different opinions. So with companies like that, it really depends on what you want to do. If you really believe in the growth of the company, it may not even be profitable, but according to your analysis, if you think that it's going to return a 10x, then you don't really care that it's not going to make money right now, because it's going to make so much money later on. But with regards to timed events and so on, you're right. The stock market, I think Warren Buffett said it best, and it's basically the stock market over the short run is a popularity contest, but over the long run, it's a weighing machine. So strategies like mine, the fundamental analysis, prove true over time. So I don't really care what happens in the next day or two or week or even month. I really care what's going on in a year, because I believe that over the years I'm going to, double, triple, 10x my money. But it's not going to happen in a very short period of time. So I don't touch timed events because I believe that the markets can stay irrational longer than you can stay in the money, so to speak. But other people have done it successfully. That's just not my strategy. It really depends on each person what they believe is a winning strategy for them. Like, do they think that they can beat the market and have the right timing each time, or are their wins going to be so much that it's going to overshadow whatever losses they make from being incorrect on the timing? For me, I believe in making as much money as possible while reducing my risk as much as possible. So that's something that I wouldn't be investing in. But for someone else, that might make perfect sense because they're going on volume and they think that their strategy is going to win them more over time. For something like Tesla, I'm very interested to hear what people think. But my current take on it is that it's overvalued. I don't think that it's going to have to execute everything right in order to support this current valuation. I think it's going to drop. I think in the future it could go back up and maybe a lot more, but I think that its current value doesn't, everything's going to have to go right for it to support that value. So right now it's not a buy for me when there's a lot more compelling options.
Okay. No, thanks for that, Sam. That's actually really helpful for me to kind of think through that.
No problem.
I actually had a question. I see that Ken said like he's pro Tesla, and I agree. I'm in it, but so I basically follow the same investment philosophy as Ken does. I look at the trends, like where we're going to go in the future, and invest based on that. Of course, I check the fundamentals and make sure, like, it's not hollow on the inside. But you might be way further. I'm sure you're way further ahead in like estimating where things are going and like how to actually pick a winner. Like you said, like picking Amazon when it was $100. How far out do you look for trends, and like how do you build a conviction for something that you're discounting like $10 to $15? Like, for example, like if you're, it's probably it's a no-brainer at this time that renewable energy is going to be the future, and like what we call energy conventionally is not going to grow at the same rate or most likely go down. But there's so many different things happening in renewable energy. Even if you pick like one sector, say like hydrogen fuel cells, there's so many contenders doing so many different approaches to things that are all kind of valid. It's hard to like, pick a winner. Like I have a few convictions, but I can't say I have like a 10x or 20x conviction about them. So how do you work your process? Like how far out do you look at for a trend, and like how do you backtrack and look at the players and kind of start building your conviction about those players?
I think that's kind of what I was getting at too. I think like that directionally a trend is correct, and I mean obviously there may even be some, let's say, a basket of a few companies within that sector that identify as best profile based on some criteria that you have, but I think it's just really hard to pick a one that's going to be a 10x or a 40x, and maybe there's some wisdom in that to just say that you kind of diversify within a product, within a set of companies within the sector, rather than, try to pick the few. Maybe an easier example, because I'm really curious to get your guys' thoughts on this, I've been thinking a little bit more, is, kind of companies that are branching out into space travel. So, whether it's Virgin Galactic or, eventually SpaceX and, Deep Blue, some of these other companies. Just curious to get kind of your thoughts on where that industry is.
Farhan, just could you just recap the previous question real quick? You were asking what's the lens it is, or how do you refactor your conviction given new information? Is that what it was?
how do you evaluate your players? Like if you have a conviction about a long-term trend, like renewable energy or like whatever it be, like, you know, automation in some industry, and then you come back and say like, okay, this is going to be a thing like 10 years from now, 15, 20 years from now, and these are all the players in the game, but they're too small, they're doing incredibly interesting things, they're showing results, but like you said, like a lot of things have to go right to reach that 10x or 20x point. And how do you start building your conviction about the players, that these are the right players to, like, you know, start narrowing down on, and like, you know?
I have a good example. One of the first stocks I invested in was called Universal Display Corp. It's ticker symbol PANL, now called OLED. At the time, it was a very small company, small cap company, and I bought it for about $6 or $7. It's now been 15 years. I didn't hold on to it. I sold it for a pretty good profit. But what I liked about it was the major holder of all most of the patents in OLED in that market. So OLED is a technology that, you know, blows regular LEDs out of the water. Like you can bend it, it has higher contrast, it has brighter colors. I don't know much about tech on a technical level, but I do know that it's superior in like so many different ways. And this is the company that held most of the patents on it. And they had good financials. Like they weren't heavily in debt. You know, they were licensing out their deals. Their management was good. So that gave me a lot of comfort to show that this company would do incredibly well over a long run. I don't even want to look at the price right now. It's incredibly nasty, but I'm going to do it anyway. It's $153 from $7 gross.
Oh man.
I think I would like to chip in a bit on that as well to share with my experience, because all of us know that e-commerce, I mean, in America has always been dominated by Amazon, so that's a clear winner, obviously, over there. But in Singapore, I think we have the likes of Lazada, we have the likes of Shopee. There are two major e-commerce companies. So I bought into C Group, which owns Garena, which also owns Shopee. So I think there are several websites that I would like to use a lot. Like there's this website called rank2traffic.com. It really shows the website visits for certain websites that you can use. And there's this website called @Annie, which I'll type in the comment section as well. It tells you the ranking of certain apps. So sometimes even before the quarterly results are out, I have a good understanding on where the results will go, because if I do look at the ranking and I see, hey, you know, Shopee app is suddenly outpacing Lazada. So there's some data points that we are actually able to capture. So I think those are actually quite helpful, because at times, for gaming companies, you talk about Activision, Blizzard, you talk about Take-Two Interactive, those kind, they're actually ways to track the demand such that you know it's actually moving on the right trend. Maybe another example here, if anyone were to go to Google Trends and type about this game called Free Fire, which is a Garena game, you could actually see that the trend is actually upwards. So I like to look at all these data points, alternate data points, to tell me the direction of the business. And over time, if I do, for example, search on Google, and the results that come out for Shopee have actually, it's even more than Lazada. I know that Shopee is taking over it, and I have all this data in real time. And there are some things that I actually keep myself monitored, and that actually keeps me vested and know that the business is on the right trend. And maybe, for example, for Amazon, in the earlier days, how do we know it's gaining traction? Just look at the website visits, how often is it increasing, and that sort of point the direction of the growth moving forward. I mean, at least that's for me, I guess.
And for the guys that are interested in enterprise software, like business-to-business software, nobody beats the Bay Area. There's a resource called the Gartner Magic Quadrant that ranks a lot of the IT, like technology vendors out there. Like for example, if you look at like Salesforce is a type of CRM, customer relationship management software. They've been a leader for many years. So you can see you can take a look at a lot of different types of technologies out there, and you know, study the ones that are the leaders in terms of execution, which is growth, and then visionary, which is like how advanced their technology and forward thinking their executives are. So that's another way to do it if you want to invest in B2B software.
Yes, I know, Justin. I used to work at Gartner, so.
Very nice. Yeah.
So just to address a fundamental question that was asked earlier, though, what is the lens in which you decide that is what is considered like a tectonic shift, right? So I mean, it's a very difficult question to answer, because essentially what you're asking yourself is, what exists today that is either fragmented or I would say there are companies that have existed extracting rents without contributing extra value to it. So a great example that exists today that actually has not been disrupted yet is the distribution network for food and transportation, like logistics. I actually started a food company several years ago, and I remember faxing over. This is like only five years ago. I was faxing like bill of ladings to like, you know, logistics companies. I mean, they're still back in the Stone Ages. They might as well exist back in the 60s, if you will. And then if you look at for Tesla as an example, the internal combustion engine has not fundamentally changed since the 1920s. Think about that for a second. And the way we manufacture cars has not fundamentally changed. So, I mean, there's lots to talk about with Tesla. I'm a Tesla bull. I know there's lots of skeptics here, but if you just think about all the things that in confluence, so like technology shifts happen constantly, right? The question is, who can assemble the pieces that that dovetail together to create something that's not just a network, but becomes a platform, right? So let's think back to Apple. So Apple, in its initial incarnation, was a computer company. But one thing they did that created incredible value for its shareholders, but not just their shareholder society, was they combined humanities and design with form factor, which is, I mean, if you think about it, like Dell wasn't doing that. IBM wasn't fucking doing that. Apple changed the game and made people look at their phones in a totally different manner. And so, I mean, I won't say that's a threshold. Like, I'm not going to say that that's my only lens. What I would say is that it is one acid test for me to decide whether a company is 40, 50x. So anyway, sorry.
Awesome. All right. Guys, we have gone really hard on this topic. I think we could go all night. But let's cover one more question. And that is, what are some common mistakes you've experienced or seen other investors experience in equities investments? I'll go first. I think a lot of you came over from other investment groups, and a large portion of the people who came over is because those groups tend to be very a bit gimmicky in in promoting like certain stocks, or like just sharing wins and losses and so on. And I think that for newer investors, this is very dangerous, because that's not really how investing works. Like, they're showing you huge wins, but you know, that's not their entire portfolio. Or they're showing you huge losses, and that you're not supposed to be gambling like that. That's not really investing. That's just speculative gambling. And I think that one of the biggest mistakes is getting emotional. I think that getting emotional about investing is one of the biggest killers of investment success. If you're able to stick to a solid game plan and take your emotions out of it and just treat it as a cold-hearted strategy without putting yourself into it, I think that will give you a lot more success over time. Because people might, you know, win tons of money on like certain trades, but it's very hard to sustain that over a period of, say, 10 years. And you want your money to be working for you for many years to come, not just for one trade. So taking emotions out of it, not listening to the hype, I think is one of the most important things you can do as a new investor. That's one of the most common mistakes I see.
You know what? I can say I have something to say because I made the mistake myself. On the point about emotion, I think humans are actually naturally not suited to be investors because humans are very trend following. Like if we see other people being successful, we want to do the same thing, and that's something you absolutely don't want to do in investing most of the time. A little story. You know, when the stock market was crashing in March, there was one day that I thought the stock market was going to go back up. So I went all in, chips all in. And I bought like a leveraged ETF for the S&P 500 to go up. And then the next day was actually the worst drop in stocks since 1933. Yeah. And then, luckily I made it up the next day, like most of it the next day. But after that moment on, I realized there's when you invest, a lot of people that invest, they have this vision that you want to like get rich quick. I'm going to make it big, make millions and stop work and retire. But another way to think about investing is think of it as like a skill. Like instead of hoping for that one big win, which is what I was gunning for, you'll be a more successful investor if you could just win consistently, right? So just think of it as like a skill you build up. This is not like something I do. I get, I make one big move and then I'm done, right? It's like I want to make 100 moves and I want to be right like 75% of the time. Then that's how you actually, make a living out of investing. So that's something I had to learn myself. Control the size, right? So that when the perfect opportunity comes, that's when you invest, right? But don't take unnecessary risk and control the size that you're investing.
I'm so glad you brought that up.
That's great, Justin.
It's such a important skill. I mean, there's two sides to it in my view. You guys can let me know if this makes sense or you guys disagree. One is it's like it's stock picking, right? I mean, essentially you're picking investments, you're picking assets. Number two is entry and exit. When to enter, when to exit. That's actually fucking hard. There's a lot of emotional investment involved with getting in at a certain point, and then when do you go? Like when do you exit your position? I exited a position this week that I was like, I don't want to exit like that much because I saw another opportunity that was perhaps bigger. But and I was like, I want to be cash liquid so I can be in a position to take advantage of opportunities. But it was so hard to decide when to do it because I kept on feeling I was leaving value on the table. So anyway, I'm sure other guys have points of view on that.
Hey, I really enjoyed what Justin have said. I think it made a lot of valid point and kind of puts things in perspective. For me, I guess it's an extremely painful thing to share, but I think a lot of investors, we tend to sell too early. And I've heard of stories and I've known of stories, including my friends, like a lot of them, in my point of view, I think they should have been millionaires by now and they caught on to some really great companies. But it is something inherent about human behavior that we tend to sell once we make 100%, 80%, 60% thereabouts. And very often we have to question ourselves, why do we want to sell it so quickly? Is it because of lack of conviction? Because even though at times a company that could gone up by 100%, you just think about the total addressable market, think about the runway that the company has, and sometimes, deep down in your heart, you know that this company still have many years to come, to grow, but yet you are still being seized by, your own greed, right? So that really occurred for me. And I think, just to share a story, I think, like obviously you could have made more money, but I think, there's one thing because sometimes even after doing so much work on it, you have that conviction, like full conviction, but yet you still sell very early, so that's going to be painful. But on that part, if you don't do any homework and when you make 50%, 60%, of course you'll be in a position to say that, hey, you want to get seize your quick gains, right? But I would always think back to this thing, right? It always says that let your winners run and cut your losers, right? So, you know, if you are always taking profits every single time, then the chances of you hitting or being financially free will also be affected, right? And Charlie Munger often says this, right? Said this, don't interrupt compounding unnecessarily. So sometimes the best thing in the market is doing nothing. And often we always think about doing nothing means that we're not thinking, right? But actually, I think quite differently, on the contrary, is that sometimes to do nothing, it requires a lot of thinking, a lot of discipline, and that really gets us on the right path of financial freedom, right? Always let your winners run. So that's one of my painful lessons, all right, is to really sell too early in the early days when I was an investor. Yep. Thanks.
I think
That's
one
a really great thought, Kevin. I think that's one of the challenges that we all struggle with, like taking your winners too early. I've had a bunch of those myself. I don't want to share.
No, I was saying that one of the things that definitely helps is so I agree with the mistakes that like emotions and FOMO, I think is what Justin described. They definitely get the best of us, and it's happened to me. But one thing that helps me fight the emotions is having a conviction about like why I'm putting money in a certain stock. So if you're investing in something, like, you know, having a conviction about like where it's going to go and why this is a good company helps you stomach like a 30% drop in the market or something like that and stick with it. Or if you see a better opportunity, you know, okay, I can like cut my losses somewhere instead of waiting for it to come up and like reallocate my capital, or like even take profits and like put somewhere, because I feel like this capital can be reallocated in a better way somewhere else. So like having that conviction definitely helps me a lot with uh, fighting the emotions of selling or FOMO buying most of the times. I think that's something that can help people.
Yeah, so good points, guys. I have something to share just for the newer investors out there. Just remember, if you guys remember from the introduction, that I mentioned something about how I lost half of my tuition in 2010. That was while I was working, interning at Morgan Stanley. So I just want to share the experience a little bit. So, you know, there's some of the pitfalls to avoid. So at that time, I'm Chinese. I was born in China. I was raised in China. And it's literally spent half of my life in China, half of my life in the States. So at that time, when I was working at Morgan Stanley, I thought I was the shit, right? Because I thought I know everything. I can read the stuff. I read a 10K, stuff like that. So I was very excited about the Chinese companies coming into the US. And then at that time, there was a so-called Chinese Facebook, Yuan Yuan, that was trying to come to the US, try to launch their stocks here. And, you know, I used Yuan Yuan, reconnected with some of my friends back in China. However, at that time, when Yuan Yuan was being IPOing, and I have too much faith in the company, and I was kind of blinded by my emotions, that in knowing that the company did not have a long history of fundamentals to support its value. So I invested heavily into the stock, and periodically too, even though the price was falling, but I just keep having this blind emotion in there that, oh, I'm gonna make my money back. I'm gonna make my money back. It's gonna become something big in the future in China just because the population's there. So I guess the bottom line is the company never really recovered, and then they just made up a bunch of fake data. And then the server just kind of sucked, and I lost half of my tuitions over there. Fortunately, I made it back elsewhere. But I guess the moral of the story is you really have to know the numbers and try to avoid IPOs, especially as new investors, because IPOs, there's not a lot of data there to play with, not a lot of good historic data to look upon, except the ones that are being manipulated by the people that are trying to, you know, bring it to the markets. So what can I say? It's always do your fundamentals, know what you're investing in, and do your homework. And don't just invest in something because everybody else is investing in there. I mean, I don't regret missing the Tesla run, and because, you know, at that time, at a point in life for me, that it just feel like it's better that I invest elsewhere. And you know what, you made money at the end of the day, you made money at the end of the day. It's always better than losing, right? So here's my take for the new investors.
Hey, Will, quick question on that. How do you characterize the Chinese market differently from the US market? I say that in the context that I've always wanted to invest in the Chinese market, knowing there's several winners there. However, there's an example of Luckin Coffee, for example, which I was surprised because I always thought that it sounded like a great play, a great story. But I'm curious what your thoughts are and just sort of how the pitfalls there.
Right. The problem is the transparency. You know, it's just, you know, number one thing is that the data are not very transparent. When they come here, when they IPO in the US, I don't know if you guys remember this. It's Ren fell. There was like a coffee company called the Luckin that was trying to compete with the Starbucks here. You know, later on, we just kind of like turned out that they're just like faking all the data and muddy water caught them. So I think the problem with the Chinese company that I lost so much faith in them, even though I still believe in some, I believe in Baidu, just don't get me wrong. But for the most part, for most companies, it's launched in the US. I have a feel like they're just coming to the US to grab money. And I just don't want to touch their IPOs because you never really know what exactly is happening in China, just because you don't get that type of transparency on the news as you did in the US or in other Western countries.
I'll second that, Will. I think that there's a lack of transparency and a lot of companies tend to fake their data. I worked in China for a number of years and it was pretty crazy. Like, you know, they don't have the same type of protections and laws or I guess compunctions about faking financial data. So you can't really trust what you're seeing in the financials. So for a strategy like mine, where you depend on looking at fundamentals and financials, that's just not going to work. Even if you try to identify like, hey, is this going to be the next big thing? You have to wonder like, are they faking some of their data or not? And that's, I guess, a judgment call. That's an extra layer of risk. So if there are better opportunities that you can see elsewhere, then I would go for those, unless something improves about the transparency and the ability to provide solid data.
Yeah, and IPOs themselves are very risky. As Will said very presciently, there's not enough data. There simply isn't enough data for you to make an educated assessment of the risk profile of a company. So I think Vincent raised his hand too. Did you have a question, Vincent?
Oh yeah, I was actually, Sam said most of what I was going to say, but with regards to not just Chinese, but international companies in general, the risk is compounded with regards to things like fraud because US courts tend not to be able to enforce anything against people who are not in the US. So if you're in the US and you fake your data, like your shareholders can sue you and you can go to jail and we can actually enforce that on you. If you're in China, like if you're a CEO in China and you fake your data, what's the US court ever going to do to you? Like as long as you never enter the US, you're basically good and you don't really ever have to come to the US. So when we're talking about like the risks of faking data, the additional layer of risk comes from jurisdictional issues. And that's just the legal perspective for me.
Awesome. Thanks, Vincent. Sam, I think we're hitting 9:30. I know we can talk about this for a long time.
We could probably go all night.
You guys can if you want to. But why don't we kind of close the loop a little bit, Sam? Do you want to kind of begin the process?
Yeah, I agree. Thank you guys for staying for an hour and a half. And what we usually like to do at the end of our calls is basically throw out like your offerings and your needs. Basically, what can you provide to the group and what would you like from other members or from the group itself? So we like to just go down the list and kind of share. We want this to be a valuable resource for everyone, what you can contribute and what you like from the group. Why don't we just go down the list and start with Kenny?
Okay. Yeah. I'd be glad to contribute is I'd like to teach you guys just like how to analyze companies, like how to read 10Ks, how to use like some of the ratios that are in the financial statements, like free cash flow, price earnings, stuff like that. And also like, just help you understand companies and the businesses and management, stuff like that. And what I like to learn is just maybe like learn, like make connections with like the industries that everybody works in, and just kind of, just learn and get some insights, and also maybe learn some real estate.
Awesome. Thank you, Kenny. All right. Looks like most people learned something today. Oh, actually, everyone learned something today according to our results. Thank you for that, everyone. And next we have Justin from the Bay.
Hey guys, I love meeting you guys. I'd love to share trade ideas. Like for example, like right before the stock market crash, it was like February 24th. I called my investment friend up and I asked him to, like, he should get out of most of his stocks, and he did. And then the stock market tanked. I want someone to do that for me because I can't always be watching the market. I got other stuff to do. So I think if we call kind of maybe like warn each other, support each other of, maybe there's an opportunity here. You should, do your own research, but consider that, based on your thesis. I think that'd be great if we could just share ideas together. Like, just like how I said, I think gold miners and silver is going to be good. I think, you guys have some great ideas as well. If with your own specialties. What it can provide.
Make sure it's on AIN.
What is it?
I said, for those kinds of questions, let's have an engaging discussion on AIN. I would love to see more interesting questions posed and a lot more.
Yeah. We can definitely post it on the group, and then, everyone can help analyze it and pick it apart.
Yeah, awesome. Great. And then like for what I can do is, I started trading, only in February. It was like an area of my life I ignored because I always thought, I thought the stock market was a place that couldn't be mastered. It's kind of random, but if you're new, I can kind of help you, like get you set up on an account and make it so that you don't lose money. That's like the biggest thing. Like, just don't lose money, but gain experience, right? And there's a lot of those simulated accounts that you can use. I highly recommend it. And you can even ask for real-time data, because the data you get there is like 15 minutes delayed, but you can ask for real data as well for free. So, if you're a new trader, always feel free to ask me if you need something.
Awesome. Thank you. All right. Next we have Sam Rambo. Thank you for spending your morning with us from Australia.
Okay. What I can probably offer to the group is, so I've been actually trading for 17 years, since 2003, I'd say. I've probably traded CFDs, options, futures, and now I primarily trade Forex. I can probably show you guys how to read the charts, how to day trade, and
Hey, I can't hear you.
It looks like the audio.
Yeah.
Oh, okay. We can hear you now.
Oh, okay, yeah. Because my headset keeps dropping out every 5 minutes.
Oh, sorry.
So I was saying, I can show you guys actually how to like read the charts so you can actually see. So Justin, you were saying before, if somebody can tell you when something was going to happen, like the S&P the other night, you can actually see when it was actually going to turn around based on what the chart was going to do. So there are specific patterns that, the charts would actually do before it actually makes a move. And that's what I'd say I specialize in. So I look at I look at multiple timeframes as well. So I look at the daily chart, the hourly chart, the 15-minute chart, the 5-minute chart, and sometimes the 1-minute chart. So I can kind of see in finer details of what's actually going to happen. And then I make my decisions in terms of when I get in and when I get out. I can show you guys how to set up and build out your own trading systems as well. So I think that's one of the most important things that you got to do if you want to be a successful trader, or even if you want to invest in the long term. You need to be confident in your own system. You can't just go around asking people, oh, should I get into this or should I get into that? When should I get out now? Because trading is about probability. It's not going in and gambling, you know. You have to understand that your system is going to work for you by a certain percentage. Is it going to be a 90% win-loss ratio, 80% win-loss ratio? And just to hone in on one or two things. So don't try to trade CFDs and Forex and futures and all that kind of stuff. It's just too much there. So start off with something like, if you want to start with stocks, and you start with stocks first. For me, I've kind of evolved and I only trade Forex now, so I only trade 2 pairs. There's literally probably over 50 different pairs that you can actually trade. There's Forex majors, Forex minors, and all these different things. But in a day, I trade about 3 to 4 times a day, and that's just only with 2 pairs, the Euro USD and the USD JAP. Am I talking too fast or?
No, that's great. Thank you.
Yeah,
actually,
so
I was going to ask you, Sam.
Yeah.
I actually think the group would really benefit from maybe I don't know, maybe just like kind of a workshop again, just getting started on trading, because I think there's a lot of stuff there around setting up, and then the mindset, and then the frameworks. Would that
yeah,
be
so I've actually created. So I've just started a YouTube channel. I just mentioned in the group, just to do something a little bit different. So about 3 weeks ago, I made 3 videos on how to get started in day trading. And for the beginners that are, you know, in this Zoom call, if you don't know what day trading is, I talk about what is the difference between day trading versus investing, and how it's different from buying stocks and, you know, trading on margin and things like that. I haven't released a video where I talk about what brokers I use and how to set up. That will be coming over the next 1 or 2 weeks when I get time to actually film that. But I think for you, Sam, and for you, Ken, based on your investment strategy, if you also learn how to just to read the charts maybe once a week or something like that, you can actually, I'd say, be able to time the market a little bit better as well. There are certain patterns that the institutions, that the big banks would actually do, and you can actually see it reading in the charts itself. Because what I normally say to people is, there's so many different news, opinions that are going around with certain stocks, right? And you don't know what to believe. But the thing is, the chart is the chart. The chart never changes. Okay, so whatever happens on the charts is exactly what it is that's actually happening in the market at the moment. And you can see when the big banks are starting to, let's say, buy in or actually liquidate their positions. When they liquidate or they buy in, they always create a pattern. There's a trail there that's actually happening. And over time, you can kind of like see them creating those patterns, and then you can follow them. So we're actually not trying to time the market and predict when it's going to reverse. What we're actually doing is just piggybacking of where they are deciding to move. So when are they going in, when are they going out? We're just trying to figure out when are they actually going to liquidate their positions. But since their position is so big, they liquidate so much that they can't do it in one day. They have to do it slowly. Does that make sense? And when they do it slowly, they will leave a trail. And that could be like an accumulation pattern or something like that. There's more to it than that, but that's just an example.
Sam, would you be up for doing another one of these kind of calls where you kind of do us the basics? Just give us like.
Yeah, I can do that for you guys. Yeah, no worries.
Tremendous. Let's talk again.
Yeah.
Awesome.
No problem.
All right. Next we have Chinmay.
Okay. Yeah, what I would like to have more from this group is a broader discussion about how people are working through the processes to pick stocks or pick new investments. Because I think having this discussion will basically be a better way to spread knowledge, apart from if someone is sharing a tip or something, yes, people have to do their own research. I agree with that before getting in. But just discussing, for example, Sam, your process or Ken's process will help drive the point on how you guys are actually operating. And I feel like we'll all learn a lot from this kind of discussion-driven knowledge sharing. What I can offer to this group, I mean, I've mainly been working in technologies and follow technology a lot. So I could probably help or like, kind of work with some of you guys to go through like financials and like technology trends and things like that. I see that there's a lot more experienced investors here. So I can't say I can teach them more in terms of like doing better stock picking or trading, but I can definitely work with them and like be a second set of eyes, like, second opinion, and help with the learning. With beginners, I can obviously help with like, setting up their basic processes, like helping them or like bringing up to speed about mistakes that you can make as beginners and things like that. Share some of my experiences, share some of the mistakes that I've made that cost me money, and what went right, what went wrong, that kind of stuff. I can basically give my time and with beginners and help with that.
Great, thank you, Chimay. Kenny.
Yeah, I guess I probably should let someone else go. I guess I think I already went. Didn't I? I don't remember. Sorry.
Oh, good. It's been a long discussion. Okay. Let's see. How about Eric?
Yeah. So, yeah, I think just having more live discussion would be useful. I think incredibly helpful from this group. Just echoing what some others have said before, like Slack, Discord, something that's a live chat. So yeah, like I'm also happy to help set that up if needed. Yeah, as far as things I can offer, like probably just contribute to that chat. Like I'll admit I don't have the most comprehensive experience with day trading and with derivatives, but I can offer insight for the beginners in the group. And I think, well, having explained this so many times to other peers who are interested recently, I think I have a pretty good system for explaining how most of this works in a way that hopefully discourages people from taking risks that they don't know about. So yeah, so that I can offer.
Awesome, thank you. We've had a number of people who either had to leave or would like to skip their turns. It's hard to keep track, so how about let's do this. If anyone else would like to share, why don't you go now?
Hey Sam, this is Farhan. I'm just actually about to hop off, but I can just go very quickly. I just want to thank you guys again for organizing this session. I honestly find it really helpful, and thanks for bringing everybody together and building community around this. I've been options trading now for about 3.5 years. You know, I've had kind of mixed success, but I've learned a lot, I think. So if anything, you know, hopefully vicariously, I think some other newer investors can learn from my mistakes and, you know, hopefully gain from some of the knowledge there. And then most of my profession is focused on consulting for large employers around the benefits space. So essentially kind of healthcare point solutions and carrier solutions that are aimed at large businesses. I'm always happy to do a deep dive and can provide my knowledge and expertise there if anything comes up. I'm really keen to the idea of like workshops and formats, you know, where we can probably learn from each other. I think it's a really cool idea and would love to see more of that, you know, in any of the things. I think real estate is very interesting to me. Obviously, I think, you know, equities markets are pretty cool. So thanks again, guys. I really appreciate it.
Awesome. Thanks for joining.
Sam, I'll go next because I got to drop as well. What I was going to say is I think I could use more help sort of understanding areas that are outside my expertise. So I think CRISPR gene editing, I think, is something that Sheena mentioned. She knows a lot about it. So I would love to learn more about your thoughts on that. And also, we really love more people posting their ideas and questions on AIN. I think the more we share, and it could be something as simple as, I found a great article, or here are my quick thoughts. Here's a white paper that I found. Eventually what we're going to do is actually we're going to do some spotlights of some folks, because I think a lot of you guys have very interesting perspectives. So that would be my ask, and my ask for help. Where I can help you guys is if you have very specific questions on the origins and evolution of technology over time. I kind of consider myself a bit of a technology historian in a way. I love studying economics and financial systems. So I can probably help with that. And then in startups, I kind of have a network here in New York City, so I can offer you perspective there. And then that's it. Cool. Thank you.
Awesome. Thanks, Ken.
Hey, Sam, this is Sheena.
Hey, Sheena.
Hi. I can't offer anything, but I do want to say that I really appreciate all of these. Some of the things that were mentioned, like having a workshop, I think would be extremely beneficial. Another thing is a lot of people have said they're more than welcome to have other people contact them. I'm wondering if we could, I don't know if it exists, but if we have a chatting platform like on a WhatsApp, and then categorize people in specialties, and then having just the network be able to chat them with specific questions, because a lot of people offered guidance for beginners, which I would love guidance. I'm wondering if that could possibly be a beneficial thing for this network.
Great question. And some people already asked.
We're exploring that right now. Yeah.
Oh, okay.
So we may actually do a poll and see if there's a lot of people ready to sign up. But yeah, definitely in the works.
Okay, because that would be really cool networking platform to do.
Great.
Thanks again for everything. It was really good.
Thanks for participating. Awesome. Thanks, Sheena. Did anyone else want to go?
Yeah. So I'm happy to help the Slack and chat community. What I can offer this group is not legal advice, but I can tell you how I analyze things from having a law background. And I can offer you extreme skepticism on just about anything, because I'm really, really good at pointing out things that are wrong. Sometimes.
Nice.
Yeah. Also, being contacted for anything, and happy to trade trading ideas as well.
That's the mark of a good lawyer.
I mean, it's probably meant that I've missed out on more things than I've gone in on, but that could be a good thing in the long run.
Definitely. Awesome. So I guess I'll go next. What I would like help on is kind of just reiterating what Ken said. If you have any ideas, if you have anything to contribute, please share it on the AIN Facebook group. Then we can get a good discussion going, and people can contribute more ideas and answer any questions that you might have, and also just get a great flow going and increase everyone's knowledge together. Where I can offer help is I've been investing in stocks for the past 15 years. I've done quite well for myself. It's funded basically my businesses as well as my real estate investments and other investments. So it's I think I have a system that works, and I'd be happy to share knowledge to beginners or field questions and things like that. And I love to talk with other investors too, and kind of pick their brains and get connected with everyone. We're very honored to host you, and it's been a wonderful discussion. I think honestly we could probably go all night, but I know it's getting late in many places. So thank you all for joining.
Thanks everyone. Thanks for joining.
Thanks everyone.
All right. Thanks everybody. All right. Good night.
Good night or good morning.